Yes, this time they revised the outlook to 3.7%, so not a massive revision. But there is a more cautious tone, and this report is the first one that is going to be presented in Paris by the new chief economist, Laurence Boone, who just joined a couple of months ago. And there's a more cautious tone to this report, and they do mention that expansion may now have peaked, and this is a key takeaway from this report. They talk about considerable uncertainty and that downside risks are intensifying, and that's of course down to trade tensions, and they very much mention this as the key element that could be a risk to the global economy. So I caught up with Laurence Boone a little bit earlier, and I asked her to talk about China, the trade tensions, and how much this is an impact on the Chinese economy.
So for China, what's interesting is we haven't changed our growth projection compared to 6 months ago, and we still see healthy growth of 6.7%. The trade escalation and the tension around protectionism have three impacts. One is the direct impact on targeted sector. The second is the confidence effect. And the third is the impact on the production value chain. The targeted sector, it's quite small. There has been a small renminbi depreciation, and China's government has compensated to some extent. So the impact, the direct impact is reduced. Now, on the confidence impact more globally and the value chain, I think it's weighing on uncertainties, and it also has the potential of creating some disruption in Southeast Asia because the value production chain is so integrating down there. So we are not so much worried about China, whose growth is more driven by internal demand, as what will be the knock-on effect on the other Asian economies.
So looking a little bit more in details at this report and looking specifically at Europe, they expect a reasonable growth, around 2% for 2018 and 2019. For Germany, they expect solid growth. For France, they see that the reforms carried over by the Macron government to bear fruit and support growth in the coming few months. However, they do single out two main risks for Europe, and that's Brexit and Italy. Take a listen.
We really do hope, we think it's vital that the deal being struck on there and that it maintains as close as possible the relationship between the EU and Britain. And then the other country we were looking at is Italy. There are two things which for us are extremely important in Italy, or I should say three. First, banks, and it's undeniable that efforts have been made. And then the main thing is growth. Growth has been lower in Italy for decades, trend growth, and it's also slightly lower in this recovery than France and Germany. And it's in part due to demographic. It's also due to a lack of investment. And the message we really like to get out for Italy is focus on growth, focus on productive investment, pursue the reforms which have been initiated by the previous government, such as the Industry 4.0 plan, which is key for competitivity. And when it comes to public finance, given the level of debt, given how important confidence is those days, stick to the EU fiscal framework. And within public spending, really do target this expenditure towards investment that will be productive and enhance tomorrow's growth.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.